Hey all, let me introduce you to Mo, awesome guy, and you can see he has a mastermind. He actually him and a couple of other people, or a few other people, created a mastermind. Mo's specialty is economics and real estate, and he'll explain why that's important. We were just talking about it. He was kind of explaining. I had to stop him because it was getting into a lot of great details. I'll let him do it. So Mo, tell us a little about you.
Well, Raju, thank you for having me on today. I appreciate it. We've been communicating on and off for quite some time now, and it's we have a lot of great conversations and a lot of great discussions. So it's great that we can do this together and share this with others. So thank you. But yeah, to what you brought up, yeah. So I've been passive investing in a number of opportunities in commercial real estate for some time now, and recently I've basically started my own company and partnering with other people and bringing these opportunities to passive investors and in various asset classes, in commercial real estate, multifamily, mobile home parks, self-storage, senior living, which is one that I really like a lot, and industrial as well as another asset class based on, changes taking place, excuse me, in like e-commerce and when with regards to other changes in retail that are affecting the industrial real estate space. So, but generally speaking, I first got into, or before I even got into real estate, I was an avid fan and an avid watcher of the financial markets. Going back 20 years, I just always have had an interest in how economics works and decisions that people make. I've always had an interest in the financial markets as well too. In addition to the stock market, but commodities, currencies. And I've always kind of followed these markets to better understand how they work and how they're all interrelated. And I first got into real estate after listening to a podcast, actually the real estate guys, who've got a really well-known, in fact, one of the biggest podcasts out there. I first got into real estate after listening to these guys. They would talk about the macroeconomic environment. They would talk about the financial system. They would also talk about how beneath the surface, we have a lot of issues and a lot of problems within our system. And it manifests itself, every 7, 8, 10 years, we have some type of crisis, where the financial system needs to be saved. We saw it back when the tech bubble burst in early 2000s. And the Federal Reserve, actually before even that, a lot of people don't know that back in '98, there was a hedge fund called Long-Term Capital Management that almost basically sank the entire worldwide financial system.
Wow.
And that was something that wasn't really quite as well known. And the Federal Reserve had to come in and inject, extreme amounts of liquidity and into the market. But then a few years later, there was the tech bubble under Greenspan, and, they basically had to they came in and they, if you want to call it, save that, and then of course there was the global financial crisis back in 2008, 2009, whereby, central banks all throughout the world, started injecting and, suppressing, or I should say not suppressing, but, artificially lowering the interest rates worldwide to basically stimulate consumption, and to provide liquidity to the markets. And we saw all these various types of monetary and fiscal policies and governments spending huge amounts of money. And at the same time, we saw really low interest rates. And of course, that made its way in asset valuations, and then of course now, with COVID, now we see, what's happened with COVID. We've seen trillions of dollars now being injected into the financial system. And people, in some cases, people are literally getting free checks from the government. And of course, that's a whole other discussion in itself. But I think more importantly for, people out there is to know what are going to be the long-term ramifications of all this, all this cheap money and all this stuff being injected into the system is going to have ramifications. One of them being inflationary, of course, and also the search for yield. There's going to be a continued search for yield and income. You can't keep for many, many years now, you don't get a return on your money in a standard savings account. Right. And what does that mean? That means that, people that are savers, especially people on fixed income, they're being even hurt more. And even those people on the lower end of the scale, the poor, people who don't have assets, because people who have had assets have experienced some, to a certain amount, they've experienced wealth, an increase in their wealth, let's say, whether by way of valuations of stocks or real estate. But those people who are asset poor, on the lower end of the economic scale, they're the ones that really feel the brunt of this, because they don't have that, they don't feel the byproduct of that kind of wealth effect, let's say. And all this, of course, being borne by, monetary policies by the Fed, and of course, fiscal policies as well, too, by the government, which is going further and further into debt. So I know I just gave a long explanation, but there's even more, and there's even more to it than that. I mean, when you combine that with, trends like, for example, increases in automation, that means jobs on the lower end of the, excuse me, on the lower end of the scale are going to continue to be affected. We've had stagnant wage growth in this country for many, many years. Underemployment is becoming more of a problem. There are a lot of young people that have been going to college and getting degrees, and they come out, and the ones that do find jobs, a lot of times get jobs in fields that are unrelated to what they studied. And, or sometimes in some cases getting jobs that don't even require a college degree. Right. And so all these things, are really playing into long-term fundamentals of, commercial real estate. Like I said, people also searching for yield, wanting income. And, going into income producing commercial real estate assets is one of the most popular ways of doing that. And of course, a lot of people out there don't understand how there are opportunities to invest in commercial real estate. They believe that, a lot of people, I should say, believe that the only way they can invest in real estate is to either go and buy a single family home as an investment property, or a second or third home, let's say, or to invest in a publicly traded REIT, which unfortunately is a lot more speculative, because it's prone to the market behaviors and the volatility, let's say, of the stock market. Because, whenever you have something publicly traded, you're going to be subject to that type of volatility, like we saw back in March when the stock market and, people were just throwing everything out. It was panic selling. And that's one of the problems with, when you're dealing with public assets. But when you're dealing with private real estate, you don't have that type of volatility. And of course, but what goes hand in hand with that is liquidity, right? Real estate has high transaction costs. You can't just get into real estate and decide the next day, well, you know what? Yeah, I don't know if I want, why did I buy that piece of land, or why did I buy that home or that apartment complex, or whatever it happens to be. And so decisions have to be carefully made. And that's where I also believe that having an idea and a better sense of the macroeconomic picture comes in, because when we buy real estate, we are buying for the long term, right? These are long-term hold assets that we're holding as a minimum 3, if not to 5 to 7, sometimes in some cases up to 10 years. And so we have to make sure that we're making not just good decisions on an asset level, but also good decisions in the current environment that we're in. And I think that everything that we've seen in the last few months in terms of monetary and fiscal policies are just going to make the case for commercial real estate and real estate in general, and also, I should say, even tangible assets. I think it just makes a bigger bullish case for all these things. Precious metals, and I know this may be a little bit more speculative, but even like assets like Bitcoin as well too, that have built-in scarcity and that have a track record of 10 plus years now. But that's a little bit more on the speculative side, I will admit. But at the end of the day, any type of asset that has scarcity and that can provide a store of value, especially given the fact that central banks have already signaled that they will do whatever they need to do to make sure that there is some type of economic growth. And that's really what a lot of this boils down to, is they think that they can stop, the hurt and the pain of economic contractions and recessions. And at the end of the day, it's all debt based. And if you look at debt levels, at the consumer level, at the government level, at the corporate level, at all levels, I mean, it is really growing exponentially. And there's going to be a day of reckoning, but that's probably also beyond the scope of this discussion. We can have another recording about that. But
so. Yeah, no, great segue. So the 3 things you mentioned, or I think it's 3 things, but anyway, biggest thing is if you don't have assets now, you better start having assets, because obviously the way you explained it clearly, where the monetary policy is going, your dollar is not going to be worth much more in 5, 10 years. Second is you are great at understanding the economics, so you can educate people on the economics and investment strategy. That's your specialty. Commercial real estate, obviously. And the third is obviously why commercial real estate is, at least in my, I'm kind of, I think commercial real estate is the way to go. Personally, I mean, sure, I'll buy some single family homes as an asset maybe, but for me, commercial is where the passive investment. So the biggest thing with you would be, you, if somebody is pretty new, doesn't know much about real estate, Mo would be a great person to talk to educate you. He got a ton of material. Trust me, I mean, all you have to do is go to his material. But talking about that, please explain more like what kind of materials you have, how you can help, the passive investors who haven't done, investing before, who think like they have to hold an asset to, in their hand to actually be an investor. So please explain how you help them.
Yeah, definitely. Excuse me. One of the things when I first started investing is, you never really quite know. You sometimes don't have like a good foundation, but you just kind of get into it and you do it. And then you kind of look back in retrospect and you're like, well, I wish I would have known this. I wish someone would have explained this to me. And so I've always kind of wondered, and and there's a lot of material out there, I will admit, but sometimes it's about presentation and packaging. You got to like get a small amount of information here and a small amount of information there. And so what I did is I spent several months and I sat down and I wrote an ebook, which is actually available on my website. And the ebook is just about 40 pages long. And in fact, one of the chapters in my ebook actually covers some of the stuff I just mentioned right now, kind of like about the macroeconomic trends and also demographics as well, too. That's also a big one, too. And also, which makes it even another bullish case for commercial real estate is, when we see, one, lifestyle choices, and two, people renting more out of necessity. And that kind of ties in some of the stuff we've mentioned already. And so I sat down and I wrote an ebook. It's primarily multifamily focused, but a lot of the stuff in there transcends and applies to other asset classes, like senior living and mobile home parks. At the end of the day, these asset classes, fulfill a basic human need of wanting to provide shelter and a place for people to live. I grew up, not by the best means, so I spent most of my life, living in apartments. And so I kind of understand that perspective of what it was like, when you're living in an apartment that wasn't maintained. And, a lot of people would be more than happy to pay an extra $50 a month to have, appliances that work, that are reliable, in a community that's safer. So there's a lot of things that, can be done to really improve, what I kind of look at as a micro community, right? Each apartment complex is like a micro community. And so when you bring up, each micro community, then the whole community comes up, And so as far as resources go, I wrote my ebook and I get into some of these ideas in the ebook as well, too. In some cases, I'm just kind of touching upon them, but, the ebook kind of takes you from the very beginning of, for someone who probably has no idea what real estate or commercial real estate is, and then gets into, hey, what's a passive investor? What's an active investor? I get into syndicated documents, what are they? Because these are really syndicated opportunities. As a passive investor, you invest and you have the ability to, not the ability, you are a direct investor. And essentially you have a direct ownership in these assets. You're not running the day-to-day management of these assets, of course, as a passive investor, but you are direct. We have a direct investment in a piece of property that you can drive by and you can go look at. It's not kind of nebulous like when you buy some stock in a company and you don't know. You may know who the personality is. You may know, okay, the company's owned by Elon Musk, but can you drive by and see Elon Musk? I mean, if you can, I mean, I guess maybe that's great, but so there's a disconnect that takes place, right? I mean, that's something that I always kind of had a problem with, when I invested in stocks primarily, is that I felt this kind of like I wasn't connected to anything other than, you know, through a brokerage account.
Right.
You know, I couldn't pick up a phone and call the company if I had a question. And, you know, yeah, I guess some of the companies have investor relations, but it was on a completely different level, you know?
Right.
And these types of opportunities, they present that. You have a direct ownership.
Right.
You know, in a lot of cases, you're investing with probably maybe as few as a dozen or a half dozen other passive investors to as many as several dozen, right?
Mm-hmm.
And so it's more of kind of like a family-based kind of arrangement, I think, and I feel. And you know, the people that are hopefully you've taken the time to understand who the sponsorship team is and the management team, and to develop a relationship with them. And so that's how you can kind of more intimately know where your money is going and what good is it doing, you know? And so that's kind of a key point that I kind of feel, and I'd like to stress that with people, so they can be more connected with what their money's doing. You know, I've always been a believer that, you know, every time you open your wallet, you're making a statement. And people think that, oh, well, my wallet is insignificant. And it's like, well, we can always believe that we have insignificance. And I know you, Raju, you're like me. We don't believe that at all. You and I feel like we can do a lot, you know. We can do a lot with other people collectively. We can do a lot, you know, as in a leadership type role. But when other people also have that mindset that they're not insignificant, that they can do a lot, then that's when we really make a difference in the world. And I think that's important to kind of stress as well too. You know, after the last global financial crisis, I kind of said to myself, I'm not putting my money into the Wall Street casino anymore. I just had enough. And I'm not saying that maybe works for everybody, but I just kind of had enough where I was just tired of seeing every few years or so, you know, the volatility of the market, and all of a sudden your portfolio drops 30-40% or more. And then, of course, you know, the people on CNBC want to keep telling you, well, now's the time to invest. Well, it's like, you told me the same thing last month and 2 months ago and 3 months ago, right? It's like, because they make money off of fees and commissions, right? And people don't know how this really eats into their returns over the long run. Right. So I kind of know I've gone off on a little bit of a tangent. I apologize, but
no worries.
But I think these types of ideas are important to know. And so on my website, I've got a number of articles as well too. And actually, as of last month, or actually this month, sorry, I've started my monthly newsletter as well. So that's also a way to kind of like keep people in my network kind of up to speed, and kind of like, you know, in touch. So monthly, I'm going to be writing additional articles and putting out additional content in addition to my ebook, in addition to some resources on my website. And I'm working on a few other articles as well too, with regards to some of these other asset classes that I mentioned. So I think it's really important that people have kind of like a well-rounded knowledge base of these asset classes, and not just multifamily, but senior living, mobile home parks, self-storage, industrial. And, you know, they can then decide for themselves, you know, which asset classes they like, you know, which ones resonate with them, which ones fit their kind of investor or their investment strategy or profile, you know. Everybody has a little different investment profile. Some people a little bit more risk prone or a little risk averse, you know. And so it just kind of depends on, you know, what they're looking for. Some people may be looking for a little bit more capital appreciation versus something a little bit more income based, or a combination of the two. So, and at the end of the day, you know, I'm not a financial advisor, and, you know, I'm not here advising anyone as to what to do. This is more of kind of like an empowerment role. It's like, I want people to be empowered to make their own decisions, so they can then better understand, you know, how they want to use their money, and what kind of statements they want to make when they open their wallets. So
perfect.
Sorry if that was a long explanation.
No, perfect. I mean, I was going to say great, you know, kind of wrap. So the big thing, if you heard it, is reach out to Mo. If you want, get more education. That's one. Second thing is, I think Mo is a great guy to talk to. You know, you can see from him, he's very passionate about, you know, real estate and commercial. So if you want to get educated, his articles are great. I hope he'll be doing some video recordings pretty soon.
I will.
We talked about it. So he will probably get into individual asset class, on how to invest in different asset classes. But mainly, I'll be posting all this information about this recording. Reach out to him, read his articles. I've read his ebook. I don't know 100% everything, but I read the important details. It's very detailed, by the way. Although it's small, it's very detailed. It's a great read. If you have no idea about commercial real estate, it's a great starting point. Please do read it. And he has his mastermind too. By the way, I'm going to get his hat and I'm going to wear it. So there you go. So he's very connected. There you go. So please reach out to him. And again, thanks, Mo. I appreciate your time. I know other people asked you, but you did mine first. So I appreciate that.
Oh, thank you for having me on, Raju. And thank you for mentioning about the mastermind. It's actually called the Next Level Mastermind.
Next Level Mastermind. Sorry. Yes.
Yes. And so I started it with a few other people, and we just kicked it off just in the last few months. Mm-hmm. And it's most of the people in the mastermind are primarily commercial real estate focused.
Right.
But at the end of the day, we're all just looking to improve professionally and personally. And so along those lines, that transcends any industry or any market or whatever business you happen to be in.
Right.
And so we got a great group of people. Mm-hmm. The mastermind is a great way to connect with others and to kind of fill gaps, if you have any, in terms of challenges you're facing, and to hear what other people have gone through. And so it's amazing, connecting with people. And a lot of this, of course, has been done through LinkedIn. So, it's a great opportunity to meet and connect with other people, as you know.
Yeah, exactly. Yep. No, amazing. So either way, reach out to Mo. Like I said, he's a great guy to talk to, first of all. So either commercial real estate or the mastermind, whatever you're looking for. Hey, maybe I'll get into it. Maybe mastermind. I don't know.
we would love to have you, Raju. We would love to have you, my friend.
I might try. I'll talk to you later. How about that?
Yeah, we'll talk about that another time for sure. But thank you for doing this interview, and thank you for sharing this with the people that you know and that you've connected with as well. You provide a lot of great value as well, and just so that people know, you and I, we've spoken a number of times, and you're a great person as well too, and I love talking to you. So
thank you, sir. Thank you so much. I appreciate the time, and again, connect with Mo. I'm telling you, he's a great guy to talk to. Hey, keep it. If you're not even ready to invest now, just get the education now. So
yeah, definitely. This is all just like a way of just increasing your knowledge base, and I would advise anyone to spend months perhaps or more just kind of understanding that there are other ways to invest, and there's other things they can do with their money, and there's other ways that they can get and build financial freedom. Mm-hmm. I don't really buy into the whole stock market mentality of I'm going to build this huge stock portfolio, mm-hmm. and when I go to retire I'm going to start liquidating that portfolio. Right. Why wouldn't I just want to build and acquire assets, mm-hmm. That I don't have to necessarily liquidate? Yep. I own assets that, bring me income, and then I have direct ownership in, and that also give me a lot of great tax benefits because I'm a direct owner. I don't get these tax benefits in other vehicles. And so there's also the tax implication, because people's biggest expense really at the end of the day is taxes more than anything else. So
tell me about it.
Yeah.
All right, sir. Thank you again. Talk to you again. Like I said, I'll post all the information on the top of this video, and please, like I said, reach out to, Mo if anything resonated with you that you want to talk to him. All right. Thank you, guys. Thanks, Mo.
Thank you, everyone.